Why not enjoy your life today? That's my biggest gripe with the 401k. It's saying, go enjoy life at 65. That's outdated thinking. Real estate says, enjoy your life today. My wife and I canceled out our 401ks, took every single dollar out, took the penalty for early withdrawal, and put our money into real estate. In today's episode of the Tony Stephan Show, I'm going to tell you why we did it. I'm also going to offer you some fresh perspective on, is a 401k really a good investment? We're going to talk about some things that are not commonly talked about on some of the negative sides of it to give you perspective. If you're new here, welcome to the channel. Be sure to like, comment, and subscribe. Without any further ado, let's get into today's episode. I'm going to challenge for anyone listening to this who's like entrepreneurial minded, why I think there are better alternatives to the 401k, namely real estate, why I like real estate over the 401k. And a disclaimer, I'm not here to tell you what to do. I'm here to show you what I'm doing to offer perspective, to create awareness in your life for you to go out and have other conversations. I'm not telling you do what Tony and Andrea do. I'm showing you what Tony and Andrea do so you can broaden your perspective. Because I feel like the 401k is like one thing where like our parents and our parents' generations, like they all did it, and we'll get into why they did it versus why you and I shouldn't do that. It's just one of those things people are like, I do a 401k. But they really don't even understand why they do it. If you ask 9 out of 10 people about their what is a 401k? They're like, I don't know, but I do it. Guys, I think before we even get into it, awareness precedes change. And when it comes to your financial future, no one's going to take care of your money more than you. Don't go blindly trust a financial advisor at Schwab, Morgan Stanley, Chase, and just blindly trust what they say, because that's what your parents did. Those days are gone. Those days are gone. Okay. You need to be financially aware and financially literate. If you're investing in anything, stocks, crypto, Bitcoin, real estate, you better be able to understand it and explain it. That's why I love real estate, because I can explain it. I totally understand it. I can go touch it. I can go feel it. I can go see it. So just don't blindly invest in a 401k.
Well, one thing I do know about a 401k is there's no cash flow.
Cash flow is king. Okay. You've probably heard cash is king. I agree to an extent, but I think cash flow is king. The problem with the 401k is you are putting your money in there. You are not receiving any benefit today. Now, if you do have an employer match, this is the only way where I would say there could be a benefit, right? So like if I put in $1,000 and my employer, let's say I work at Starbucks and Starbucks puts in $1,000, that's free money. I do really like that. But cash flow is everything, because cash flow is real today. Like we own 87 units of rental property real estate. We get cash flow every month once we pay the mortgage, the insurance, the taxes, the maintenance, any vacancy, so any commission to fill the units. We have cash flow. What that cash flow, Nick, what do you think? We can go do whatever we want.
Like buy more real estate.
Buy more real estate. It's real world applicable today. My biggest drawback, and something I really want you to think about with the 401k, you are delaying all reward until retirement age, which is what, like 63, 64, 65?
Keeps going up, man.
It keeps going up.
67, my mom. She's a nurse. She's grinded her whole life as a nurse, and they wanted to retire at 67.
What if you die at 64? You know what I mean? Like here you are, you've contributed to this thing your whole life. And yes, I get it. Your family can get it. Okay, cool. But you've contributed to this thing since you were 20. You can't get to it till you're 67, 65. So they're even pushing it longer. But let's say you don't make it that far. You missed out on all that benefit. Now, if you're investing in real estate, I hold my real estate till 67. I still get that long-term appreciation, but I get cash flow today. When I invest into anything, I want to know how soon do I get my money back? And cash flow is it's like a little hit of money every single month of me reimbursing myself from my original investment. That's what I like. That's what I like about real estate. That's what I don't like about the 401k. So ask yourself that. What could you be doing if you were investing the money you're investing in your 401k into real estate that was actually paying you your money back every month? What could you do with cash flow versus just delaying all the benefit to 65 or 66 or 67?
So that kind of rolls into lack of liquidity.
If you're doing the 401k, you're committing to that long term, because there are major major penalties to take an early withdrawal. So full transparency, full story. I did, when I was at Lifetime Fitness as a registered dietitian, again, my general manager's like, why aren't you doing the 401k? We do a company match. So they did a company match. He's like, you have to do a 401k. And what did 23-year-old Tony do? Blindly contributed to a 401k. Didn't know anything about it. Just knew whatever. Okay. Then when I left, I withdrew the money. I took a 10 or 15% penalty. So probably all the gain I put in there is essentially gone. My wife, when she was a school teacher, she was forced, like they didn't give them an option. Like at Lifetime, we had an option. She was forced to invest into multiple things, like a pension, bunch of stuff. And like she couldn't get to it to 65. She pulled that out. Another big concern with the 401k is lack of liquidity. Missed opportunities, right? So real estate is definitely illiquid. Like I can't just go get the money out today like I could in stocks, right? But like right now, after we film this, we're going to a house, a single family rental property I own that we're selling. So I know within 30 to 60 days, I can get my money out. My big concern with the 401k is there is major penalty if you change your mind. What if you are like me? Let's say, but I didn't have that much contributed. I only had like $3,000-$4,000. So the penalty was like whatever, right? Let's say if you have $100,000 and the opportunity of the lifetime comes up for you to go start your dream ice cream franchise. And it's $100,000 to put down. You do have that money, but it is tied up with major penalty and you're missing this opportunity to start the ice cream franchise. That's why I don't like even real estate. You can sell for a profit if you bought right and the market goes up and get that out. So you really have to ask yourself, am I okay with literally committing this money to 65 or 66 or 67? But what if opportunity comes up? And if that opportunity comes up and you have that money sitting in that 401k, are you going to pay the penalty? Are you going to lose? I mean, you're essentially losing money to pull it out. Are you okay with that? See, I wasn't okay with that. And that also brings up another thing we were talking about earlier, people sticking at their jobs that they don't love because they don't want to lose out on the employee 401k match. I know life is short. If you're an entrepreneur in your heart and you're working this job and you're afraid to leave the job because you're afraid of losing your benefits and you're afraid of losing your 401k match, you're in a golden handcuff situation there. I don't really love that. I don't love how a 401k makes people just feel so like restricted to this like linear path of like, I work this job, I make $60,000 a year, I contribute 20% to my 401k. Those are my big concerns. You know how much my wife and I pay monthly for health insurance? Because this is really relevant because people get super concerned about this.
Couple $100,
$700. I've made millions of dollars in my business. And I say that not to impress you, but to impress upon you. Why in the heck would I not quit the job that paid me 90 grand a year, which was really good, forego millions of dollars that I've made, plus the thousands of people I've helped, plus all the fulfillment I've received for $700 a month? Like, do you see how like mindset trapped we are? And people are like, but my company matches my 401k. Dude, but what if you invest in real estate that 4 extra money in 2 years, in a year, in 5, whatever, you know what I mean? Don't think the way our parents and our parents thought. We're living in different times. The old mindset was, I'm loyal to my employer, then my employer takes care of me in retirement. Those days are gone. Things are being automated. Jobs are being taken away. We're moving toward a streamlined society, right? Like, dude, our favorite Starbucks, they're closing to remodel because they're putting in kiosks for people to self-checkout. All businesses care about is their profit. And I say that in like a loving way, like us too. Like, it's all about making a profit. We're in the age of technology, right? We're not in the industrial age. Employers and businesses are looking to cut costs and to improve efficiency through technology and automation. Look at like ChatGPT, look at all the AI coming out. So the old way of thinking of go to school, get a safe job, work for a company that has good benefits is gone. The average millennial or Gen Z or what, they stay at a company for 2-3 years. The average person sells their home within 5 to 7 years. It used to be literally like people in our neighborhood here, they bought the house 30 years ago, they paid off, they lived there for the rest of their life. It's gone. So you can't think that way anymore. The safest job is the one you create for yourself. Always remember that. So again, if you love your job and you love your benefits, keep it. But if you have the dream to start, the whole premise of this is if you have a dream to start a business, don't let the fear of losing your benefits or losing your 401k match stop you from doing it.
I've been learning a little bit about how you create your business plans for real estate. Talk about market dependency and how a 401k is like totally dependent on the stock market.
When we buy a piece of real estate, I create a business plan for that piece of real estate. The business plan is based off of market rents, comparable rents, real hard data, based off the interest rate, based off the utility bills, based off of the insurance, right? I get facts in front of me. It's still an estimation slightly, but it's factual based on what we see in the market today, right? And we run 5-year projections with that. We own 7 apartments. We have not once missed on our projections. Okay. So we're starting to develop a track record with that. Not saying it can't happen if some like volatile thing happened and like Russia invades Canada and Canada invades you. Of course, right? We're all screwed then. 401k is tied to the market and things completely outside your control. And this is 401k, this is stocks, this is cryptocurrency. You cannot control it. My wife and I can control when we buy an apartment. We know we can increase the income and reduce the expenses based on our experience and what the market allows. It's very simple. Hey, I'm buying this apartment. Everyone here is paying rent at $600. When their leases are up, everyone else in this area is paying $900. We're going to offer them $850. If they move out, we're going to upgrade it to make it worth $900. That's the way it works. There's no such thing like that with the 401k. You're just along for the ride. And something scarier too, Nick, people don't truly understand what their 401k is invested into. I thought it was just an investment called 401k. It's not. It's tied to a multitude of things. And I challenge anyone right now with a 401k, go ask these 2 questions. First off, call up the person who sold you the 401k. See if they're even still working there. That's number 1. At Fidelity or Morgan Stanley or wherever, right? See if they're even still working there because they're usually not. They're different people, whatever, right? Ask, what am I invested into? Like, what is my money really into? Do you like those companies? Do you believe in those companies? Do you support those companies? These people who buy stocks are like, I like Coca-Cola, so I'm going to invest in Coca-Cola. I like Starbucks, so I'm going to invest in Starbucks. Like when I bought stocks a couple times, I bought Apple, I bought Starbucks, I bought Home Depot, companies I stood behind. I didn't buy the ones I didn't stand behind. You don't even know what your 401k is being invested into. You're literally doing this with your money. I don't like that. I don't like that for me, and I definitely don't like that for you. So that's number 1. Number 2, if your 401k loses money, what insurance do you have? You don't. Go ask that. And this is the thing that always pisses the private banking lady off at Chase when she's like, wow, I see what you guys are doing. You should really invest. Let me help you make money in the stock market. And I always say, oh, I do real estate. Thank you so much. And she's always like, well, I think I can. I say, answer me this question. Riddle me this. When I buy a piece of real estate, so for example, when I bought my 16 units that we've gone to and we've talked about on this channel, so go check it out, how we did it, how we bought it off market, all that good stuff. I paid less than around 1.4 million, let's say, a little less than that. The replacement cost for those buildings, there were 2 8-unit buildings. Replacement cost means if they total loss, like they burned to the ground and they needed to be rebuilt today, was over $3 million. So I paid 1.4 million, give or take, for something that would cost $3 million to build today. And if it burns to the ground, the insurance company comes in and rebuilds it for $3 million. Can't lose. If your 401k burns to the ground, no one's coming to save you. There's no check to be cut. There's no, we will rebuild it here. It's gone. It is freaking gone. Are you okay with that? Do you sleep well with that, with knowing that? Like, all investment comes with risk. Real estate comes with risk, but I sleep well knowing, God forbid, if it burns to the ground, I bought so below replacement cost that I'm in the green. Then I get a brand new $3 million building. So yeah, I got to go lease it up and fill it, but it's brand new. There's no insurance policy. So anytime someone goes to sell you something like stocks or crypto or whatever, say, what happens if it loses money? What insurance are you offering on this investment? Well, my track record. No, not your track record. What insurance is the investment offering? See, that's what I love about real estate, because things happen. Fires happen, markets happen, wars happen, recessions happen. So if your portfolio takes a nosedive, what insurance do you have? You don't. At least in real estate, we do have insurance in place if catastrophes happen. You don't have that with a 401k. Guys, that's a big thing I'm pushing to you is I don't care. I don't care if you do a 401k. I don't care if you do real estate. I don't care what you do. I'm a big believer. Every family should be in control of their own finances. And it's okay to use a financial advisor, but you should clearly understand what you're investing into.
So some people think there's tax benefits to a 401k, but I don't think they really understand it.
So a lot of people like 401ks because of the tax benefits. Okay. Here's what they don't understand. Hopefully your advisor explains this to you. If you're a typical American, your net worth if you go Google net worth by age charts. If you do well in life, your net worth should be going up as you age. And if you're not tracking your net worth, like you got to start doing something my wife and I do every month is we track our net worth. Net worth is all your assets minus all your liabilities equals your net worth. When I started my net worth, it was negative in 2016. Now it's grown tremendously. And because of real estate, it grows and grows and grows. Let's say you're me, you're 32 and you're contributing to a 401k. Your net worth is here. As you're contributing, sure, you're not paying taxes up to the dollar amount that they allow you for the maximum, right? So you're not paying taxes on that. You're deferring the tax. But when you withdraw it at 65, what do you think? Is your net worth going to be higher than it is today? If you achieve any level of meaningful success, it will be. So you are in a higher tax bracket. And because you'll be making more money, right? Your income should be going up with age. So now you're pulling money out of that 401k. Now it is taxed and you're now in a higher tax bracket. So you're paying more money in taxes on the money than you would have been paying today. So what people don't understand, as your income grows and your net worth grows, your tax bracket grows. Real estate allows me to take depreciation and tax benefits today. I get tax benefits in the future. I get depreciation every single year. But because my wife is a real estate professional, when we buy a building, we get depreciation, we get tax write-offs that we can take against our earned income today. And when we do things like cost segregation, we get large tax benefits today. A lot of people think that and they don't understand that you'll actually be paying in a higher tax bracket down the line. So be aware of that. Be aware of that. Goes back to everything we've talked about too. Benefit today versus benefit tomorrow. And the last point I really want to touch on with this is the whole retirement thing. I really want to challenge you on the concept of retirement. Again, back to our parents and our parents' parents. They worked hard jobs that maybe they didn't love, right? Maybe they didn't love for 30, 35, 40 years. Then they get a pension, then they get a retirement, and they get to go live life. You and I have that ability today because of the opportunities we have. I started my business with a cell phone, a computer, and the internet. Our parents and our parents' parents, like grandparents, they didn't have that option. They didn't have the tools we have today. And you and I are able to learn things for free on YouTube and podcasts and Instagram and TikTok that our parents and parents' parents didn't have. So they had to rely on an employer more than you and I have to. So I really challenge anyone who's entrepreneurial. Are you really gonna retire? Are you really gonna build businesses or work and go do all these things? And then at 65, you're going to just sit and do nothing. You know, the number one age of heart attacks and like heart disease and like unprepared for death is the year after someone retires because you lose purpose in life. We're on earth for two things, to give and to grow. So for you to think, again, in the information age, in the world we live in today, come 65, you're just going to be done growing. Dude, that's why I think retirement is expiration. You can't do that. You're not going to be like that, right? You're going to want to go out and enjoy life and live life. Real estate, because of cash flow, because of appreciation, because of being able to multiply your money, because of tax benefits today, gives you benefits today. Why not enjoy your life today? That's my biggest gripe with the 401k. It's saying, go enjoy life at 65. That's outdated thinking. Real estate says, enjoy your life today, right? It's still delayed gratification. It's not like buy one property, you're a millionaire, but it gives benefit today. So challenge yourself on that. And again, it's not myopic. It's not like real estate or 401k. Why not both? If you want a 401k, but why not invest into something, a business, real estate, something that provides you with enjoyment today? I just think it's very naive to defer all enjoyment, all benefit, all gain, and trust and hope and pray this 401k is going to just be there perfectly waiting for you when it's time to retire. Something else too that we can touch on really quickly. What if the market's down that year? Because again, it's tied to the market. I've heard horror stories of people who then go to retire and their 401k, their entire investment portfolio is worth half. What do you do? What do you do? Do you not retire this year? Do you wait even? You know what I mean? It's just such a dangerous game. So I really challenge you, if you're doing it, really understand it. And guess what? If it don't make sense, it don't make dollars. For me, I won't do anything, any business, any investment, any real estate, unless it feels good. I have to get that gut feeling. So if you're 401k, after listening to this, and go call your Schwab person up, go call your girl at Morgan Stanley up and ask these questions, and you don't like the answers you're getting, it's not too late. Get out now. Take the penalty. Who cares? If you're in your 20s, 30s, even early 40s, take the penalty. Get into something that offers more benefit today like real estate. Okay, guys, if you enjoyed today's episode, first off, I want to say thank you so much for being here with us. I really appreciate it. Again, not telling you what to do, just trying to offer some perspective. And as always, I'm not a lawyer, I'm not a financial advisor, so please go have those conversations with qualified individuals. If you enjoyed today's episode, please do us a favor. If you're watching on YouTube, be sure to like, comment, and subscribe, and share this with one friend, or share this with a friend who maybe needs to hear this message. Number two, if you're listening to the podcast, please leave a review. Okay, leave a 5-star review if you're on Apple or Spotify, whatever. If you want to learn more about this, you want to learn more about this concept of how my wife and I kind of broke free from the chains, I guess you could say, of the conventional thinking of thinking we need a 401k, how we were able to cash ours in and start to invest in real estate. Well, I wrote this book. It's called The New Rules to Financial Freedom. It sells for $19 on Amazon. I walk you through the step-by-step process of how I started my online business with credit card debt, and then how we built a multi-million-dollar real estate portfolio that does produce cash flow. I want to give it to you for free. So you can click the link below. You can go buy it on Amazon for $19, or you can click the link below to get a digital download for absolutely free. Until next time, my friend, we'll talk soon. Thank you so much for being here.